If your chart of account feels cluttered, you've got duplicate categories, random accounts you never use, and reports that just don't make sense, you are not alone. Here's the truth. A messy chart of accounts leads to very messy financials. Today, we are working on fixing that. This video is a part 2, so if you need a little bit more information on what is a chart of accounts and basic usage, make sure to check out our part 1 that I've linked in the description below. Hello, C-Squared Collective, and welcome to our series, Spring Clean Your Finances, Planting Seeds for Better Financial Habits. This series is a practical guide in cleaning up your books, planting better financial habits, and preparing your business for a smoother tax season next year. If this is your first time joining us, welcome on in. Most episodes are designed to stand out on their own and give you practical, actionable tips on the topic at hand. But if you would like to dive deeper, make sure to check out the rest of the series or some of our other series on our channel. As always, if you have questions, drop them in the comment section or reach out to us directly at connect@c2accounting.net to schedule one-on-one support. So grab your beverage. Today I have a lavender coffee and let's get going. Before we get started, if you would like, you can walk through each step of the video, pausing to review your chart of accounts before you move on and use this as a little bit of a co-working, step-by-step instructional video. So now let's move on to step 1, which is to audit your chart of accounts. Before you change anything, you need to review it. I recommend going through the whole chart of accounts and write down any accounts that you would like to change, shift, or combine before you start doing so. Here's a couple of questions to think about as you go through it. Are there any duplicate accounts? Are there accounts that I haven't used in the last year? Are there things that are too detailed or not detailed enough? Did I add this account in my budget? And if you have any account numbers, making sure that the numbering system is logical to you. Look for any multiple versions of the same category, any old or irrelevant accounts, or any catch-all categories like miscellaneous. Once you have your list, we can move on to step 2. Here's a C-Squared pro tip if you would like to know what accounts you have or haven't used in the last couple of years. You can run a profit and loss report for the last 5 years and display columns by year, much as like I am setting up here. You can see if you change any categories or stop using categories a little bit easier. Also, you can run a balance sheet for the last 5 years and do the same thing, display columns by year to see what categories you do or don't use. Then go and compare that to your current chart of accounts and see what accounts maybe have never been used before. Now let's move on to step 2, to simplify. Most business owners overcomplicate their chart of accounts, or they have all of the QuickBooks auto-generated accounts that don't work for their business. You don't need 200 expense categories. You need categories that are clear, consistent, and useful to you. If 2 accounts serve the same purpose, such as the auto-generated vehicle expenses, but then you added in auto expenses, consider combining them or using parent and sub accounts if you need a little bit more separation there. Such an example is office supplies and office expenses, also the same thing. Or if you have a couple expenses like gas and tolls, consider folding them into sub-accounts of a more general auto expenses parent. If you need more instruction on how to use parent and sub-accounts, make sure you check out part 1 of the other video linked in the description below. Now that we have our list of accounts that we want to simplify, maybe combine, maybe delete, we can move on to doing the actual cleanup. Now we can move on to step 3, which is merging any duplicate accounts. If you have duplicate accounts such as auto and vehicle or several office expenses, just like we talked about, the best way to handle them is to merge them together, just in case you have some transactions in one and some transactions in the other. In QuickBooks, there's a very easy way to do this. You can click edit on one of the accounts that you want to merge, so the one that you want to disappear and go to the other one, rename it exactly to match the one that you want to keep, or I like to just copy and paste the other name. Then save, and it will give you a pop-up to confirm the merge. This combines all the transactions into one clean account. And I recommend only doing this when they are truly duplicates, like we have talked about, such as office supplies and office expenses, or auto expenses and vehicle expenses, etc. Now we can move on to step 4, which is inactivate any account you do not need or don't use. So, not every account needs to be fully deleted. Sometimes you may have accounts that you've used in previous years that you might need to pull reports from. So instead, you can make unused accounts inactive. This cleans up your list and keeps historical data intact. So think of this as pruning your financial garden. Step 5 is to clean up your structure of your chart of accounts. So now that we've merged or inactivated accounts, we have all of the accounts that we want to keep, and it is time to reorganize. A great way to do this is to group relevant items under parent accounts. We've given out some great instructions, as I mentioned in our last video, so make sure to check that out, linked in the description below, on how to add parent accounts and sub accounts. Now let's move on to step 6, which is fix the miscellaneous account. I've said in multiple videos that we actually recommend not having a miscellaneous account because it's tempting to use it as a catch-all, which makes it not a system, just avoidance. If you rely on it, your reports lose meaning and your financial decisions get weaker. So instead, we recommend a couple of solutions. We recommend making an Ask My Accountant as an other expense to put in any unclear transactions that you may need to ask your accountant or do some research on. Review this monthly or quarterly with your accountant or by yourself if you do not have one, and then reassign them properly. Now let's move on to step 7, which is talking about products and services and mapping from it. This is where a lot of people may miss the mark. Products and services are names of what appears on your invoices to your clients. Your chart of account names are what appear on your reports, your profit and loss, and your balance sheet. So we have a previous video on invoices and sales receipt, which I've also included in the description below, which tells you a little bit more on how to set up your products and services. However, in this chart of accounts audit, we recommend reviewing your products and services because it maps directly to your chart of accounts. If you don't set them up intentionally, it may default to whatever QuickBooks picks. It's very important to make sure that they map to the account that you want it to in your chart of accounts in the setup process. And why is that? Because when you invoice or record any sales, QuickBooks automatically categorizes the income to the chart of accounts mapping that you used in products and services setup. If you use QuickBooks Inventory, QuickBooks also maps to the cost of goods items sold and removes it from inventory accounts based on the product setup in QuickBooks. If this isn't set right, income can get very miscategorized, your cost of goods or inventory can be missed, and reports become very unreliable. Now that we understand why, let's talk about how to clean it up. So when you go into products and services, it is time to review. Just like we did an audit for our chart of accounts, we're going to do an audit for products and services before we fix anything. Make sure that you can see the account mapping to the income or expense counts in your chart when you're looking through things. And then let's just run down our list. Are there any duplicates? Are they still mapped to the right income accounts? Are they still relevant? And remember, like we said, they should all be tracked to an income account unless you have QuickBooks Inventory. Step 8, building good maintenance habits. Let's talk about good habits. Cleaning out your chart of accounts once is not enough. Likely the first time will be the hardest, and it's certainly a good start. But as we said in our previous video, we recommend doing this 1 to 2 times a year. If your business has a yearly budget, when developing it, it's a great time to check to see what categories are budgeted for and make sure that your chart of accounts matches it. This keeps your systems healthy long term, just like you need to weed a garden often. In this second part, we took your chart of accounts from understanding to action, cleaning it up, simplifying it, and mapping your products and services to your chart of accounts so your entire system works together. If you haven't watched part 1 yet, go back and check out that video linked in the description below. It will give you the foundation that makes this cleanup process even more effective. At C Squared, we want to help you clean up your books, plant better financial habits, and prepare your business for smoother taxes next year. Make sure to subscribe to check out more of the series, Spring Clean Your Books. If you have any questions, drop them in the comment section below. We are very happy to help you out. If you do not have an accountant yet and want us to review your chart of accounts and help you clean it up, this, along with many other services, are available. Submit an inquiry on our website and reach out to us at connect@c2accounting.net. And if you'd like to see more content like this, be sure to check out our other social channels and subscribe here. I've included those links along with the website in our description below. Thank you so much for watching, and remember, keep learning so that you can stay rooted in wisdom and grow with care.